Okay, hello everyone. So in today's class, we are going to attempt MAR-JUN 2024 question. And this is a question from MAR-JUN 2024 attempt. Following scenario relates to 5 requirements. Shop is an agency which supplies temporary staff providing catering and hospitality services for events at stadium venues in Dealand. So who is Shop? Shop is is an agency. It supplies temporary staff providing catering and hospitality services for events at stadium venues in Thailand. Demand for VenHosp staff depends on the number of events taking place, whether a venue selects VenHosp to supply staff for its events. As such, there is a strong correlation between number of events taking place and number of staff supplied. So there is a strong correlation. They are related, number of events and number of staff. Okay. There is intense competition between temporary staffing agencies in Thailand. All agencies charge similar rates for the staff they provide, and there is little scope for any agency to increase the price if it charges a stadium for staff. VenHosp's average charge-out rate for its staff was 16 per hour in 2005, and that rate is expected to remain unchanged in 2006. In 2005, your charging rate was 16 per hour. You provide staff members, but rate is expected to remain unchanged in 2006. You know, there are many agencies who provide staff for events. Like you conduct an event somewhere, you need catering staff. So when hops type agencies provide you catering staff, they charge $16 per hour. The rate is going to remain constant. When House pays its staff 11.25 per hour, and on average, they work 8 hours per day. So they charge you $16 per hour, but they pay their staff 11.25 per hour because agency also has to earn some profit. So they charge you $16 per hour, but they pay their staff 11.25 per hour. Staff work 8 hours per day. They are only paid for the hours they work. By law, staffing agencies in Thailand also have to make additional contributions directly to the government at a rate of 10% on the amounts they pay to their staff. So by law, these agencies also have to make additional contributions to the government. 10% of the amount they pay to staff. Whatever amount they're paying to staff, they need to pay 10% contribution to the government as well. Legal minimum wage in Dealand was 10.5 per hour in 2005, but increased to 11 per hour from the start of 2006. In recent years, there has been a shortage of workers prepared to work as temporary staff in catering and hospitality services in Dealand because the work is seen as physically demanding and relatively poorly paid. So minimum wage was 10.5 per hour, increased to 11 per hour. In 2006, there has been a shortage of workers in this industry because work is seen as physically demanding, poorly paid. VenHosp's Human Resource Director suggested that the amount VenHosp pays its staff should be increased to 11.75. At the moment, they pay 11.25. They're saying to increase it to 11.75. CEO opposes the increase, saying it will reduce profits, but HR has argued that any decisions about pay rates need to take account of ethical issues, not just short-term financial ones. So HR is saying to increase the rate, but CEO is saying, no, this will decrease profitability. VenHosp produces quarterly forecasts for its expected revenues and staff. VenHosp produces quarterly forecasts for its expected revenues and staff costs. These have already been produced for quarters 1 to 3 for 2006, but not yet for quarter 4. Total number of stadium events scheduled for quarter 4 x 2006 is 114. So VenHosp produces quarterly forecasts for its expected revenues and staff costs. They have already produced for quarters 1 to 3 for 2006, but not yet for quarter 4. Number of stadium events for quarter 4 2006 is 114. So stadium events are 114 for quarter 4 2006. CEO has asked you to prepare forecast for quarter 4 2006 using least square regression to forecast the number of staff days expected in the quarter and based on the current rates of pay. So VenHosp produces quarterly forecasts for its expected revenues. Forecasts have been produced for quarter 1 to 3 2006, but not yet for quarter 4. Total number of stadium events scheduled for quarter 4 2006 is 114. CEO has asked you to prepare forecast for quarter 4 2006 using regression to forecast the demand for staff days expected in the quarter based on current rates of pay. Note, a staff day constitutes one member of temporary staff being provided to a client per day. What is the definition of staff day? Staff day constitutes one member of staff provided to a client for 1 day. So if one staff member is provided to a client for 1 day, that's one staff day. Summary of quarterly data for 2002 to 2005. So quarterly data, number of events, X. And for 2002 to 2005, they have given you total number of events. So total number of events is X. because they have given you summation X and telling them that this is total number of events. So adding all events, summation X is 1757. That means X is 1757. Okay. Total number of staff days, 404410. So staff days has been Y, and they have audited all the staff days, and they have told adding all the staff days, it's summation Y 404410, summation X square, summation Y square, summation XY. This is given. This is based on sample size N of 16 and S16. This is the data which the CEO wants you to use for least square regression in requirement with A1. So this is the data which CEO wants you to use for the regression calculations in requirement A1. So a typical PM question, which is giving you range of information so that you just seem to roam around in information, and the relevant points are very less. Like, see, first paragraph, when hospice and agency, it is providing staff. Okay, I don't think it will affect any question. Demand depends on number of events, and strong correlation between number of events and number of staff. Intense competition between agencies. You charge 16 per hour, the rates remain constant. You pay your staff 11.25 per hour. You have to pay 10% contribution to the government. Okay. Minimum wage is 10.5 per hour, but now increased to 11 per hour. Okay. HR has suggested to increase to 11.75 per hour, but CEO is saying no, this will reduce profitability. And company produces quarterly forecast for expected revenues and costs. They have been produced for quarter 1 to 3, not yet for quarter 4. And C has asked you to prepare forecast for quarter 4 using least square regression. Okay. Total number of events scheduled for quarter 4 2006 is 114. Okay. And summary of data, number of events, totaling, adding them all. Summation X is 1757. So number of events is X. That's why they've added all X to get summation X. Number of staff days is Y. That's why they've added all number of staff days to get summation Y, then summation X square, Y square, summation XY. This is based on N of 16. This is the data CEO wants you to use for regression requirement in A1. Okay. Now, what is requirement A1? Requirement A1 is saying that use the least square regression based on quarterly data for 2002 2005. Calculate when expected staff days in quarter 4 2006. Okay. So you have to use the data of 2002 to 2005. Okay. Use regression based on data for 2002 to 2005. So you have to use this data. Calculate expected staff days for quarter 4 2006. So you have to calculate staff days for quarter 4 2006. Okay. Round off to the nearest full day and 5 marks. Okay. So I have to use regression analysis, number 1. Number 2, I have to use the data of 2002 to 2005. And I have to calculate staff days in quarter 4 2006. Okay. So let's start this. Now, in my opinion, number of events is X. In my opinion, number of events is X. How come? You see this total number of events, summation X 1757. That means they have added all the events, all the X to get 1757. So number of events seems to be X because they have added all events and telling them summation X. That means there will be many number of events and then they added it to a summation X. So number of events is X. See this number of staff days. This seems to be Y. How come I knew this? Because they have added many Ys, staff days, and them telling them sum of Y, summation Y. That means total number of staff days, summation Y, staff days, they are telling them as Y. So this is a very important criteria for regression, that what is X, what is Y. They're adding them. All the events, number of events is X and number of staff days is Y. Okay, now pay attention. Use regression analysis based on quarterly data of 2002 to 2005. This calculates staff days in Q4 2006. Now, you're asked to find staff days. That is Y. You're asked to find staff days. That is Y. See, you're asked to find staff days. Staff days is Y. In Q4 2006. This is your requirement, that you're asked to find staff days. That is Y. In Q4 2006. The question has asked me staff days. Staff days is Y. That's why they have added all the summation Y and telling them summation Y, total number of staff days. Staff days is Y. So you are asked to find, using regression, use data of 2002 to 2005. Find staff days Y in Q4 2006. Now, what is the equation of Y? Y is equals to A plus BX under regression. Okay, under regression, Y is A plus BX. You're asked to find Y, staff days, Y in Q4 2006. Okay, so Y has to be calculated using A plus BX. Okay, so this is my main requirement, that I'm asked to find staff days Y. Okay, and Y is A plus BX. Okay, now if Y is A plus BX, what is X? What is X? X is number of events. Okay, X is number of events. So I am asked for Q4 2006, Y equals to A plus BX. For Q4 2006, what is X number of events? That's clearly told. See here. Number of events for Q4 2006 is 114. Number of events is X. So X for Q4 2006 is 114. Getting this point? I'm repeating, please pay attention. The question has asked me to use regression analysis. And after using regression analysis, they have told me that use regression analysis and use the quarterly data of 2002 to 2005. Okay. Calculate expected staff days in Q4 2006. So staff days in Q4 2006, thus staff days is Y. Okay. See, number of staff days total is summation Y. That means staff days is Y. That's why they're adding, summing them and telling them that it's a summation Y. Number of events is X. So adding all number of events, summation X. Okay. So number of events, I told you X, number of staff days Y. It's asking find staff days for Q4 2006. So I've written that staff days Y Q4 2006. Equation of Y under regression is Y equals to A plus BX. How did I tell that I need to use regression? It's clearly mentioned that use regression. So in regression, Y staff days is A plus BX. X is number of events. So for Q4 2006, what are the number of events X? It's clearly mentioned. Number of events X for Q4 2006 is 114. I put 114. Now you know regression. I just need A and B. And once I get A and B, it's all done. Once I get A and B, it's all done. So let's just move towards the working. I have to find A and B. We all know in regression, what is the formula of A? The formula of regression, A under regression is summation. Let's just copy the formula. Summation sign is here from here. Summation Y upon N minus B summation X upon N. Okay. So this will give you the formula of A. Okay. And the formula of B here is N summation XY minus summation X summation Y upon N summation X square minus summation X whole square. Okay, so I will find A and B via these formulas, summation Y over N minus B summation X upon N, and N summation XY minus summation X summation Y upon N summation X square minus summation X whole square. Okay, this is what was taught to you in the classes as well. So I'm sure you are clear with the formulas. Okay, let's find A. So for A, summation Y over N. Okay, what is summation Y? It's 404410 upon N 16. The question clearly mentioned N is 16 minus B summation X upon N. So in that case, I would be first needing B. Okay. So let's move to calculate B first. Let's move to calculate B first. So B is equals to N 16 summation XY. What is summation XY? 45496 given 45496 648 and summation XY minus summation X summation Y. So what is summation X summation Y? It's 1757 steric 404410. Okay. And summation XY minus summation X summation Y upon N summation X square minus summation X whole square. So what is N? 16 summation X square 196615 minus summation X whole square. So summation X whole square will be, I think, 1757 whole square. So let's solve this and get the answer for B. So this is the numerator and the denominator is 16 steric 196615 minus 1757 whole square. Let me check where this calculation error is coming. Just a second. So I have to correct some brackets, that numerator needs to be made separately and denominator needs to be made separately. Here, one bracket was missing, I think. Yes. So 295.92, let me confirm whether this is the answer. Yes, 295.92. That's the value of B under regression analysis. So by the looks of it, it doesn't seem too tricky, but you need to have sound concepts of regression analysis in this. That number of events is X, number of days is Y. And you're asked staff days Y for quarter four. So Y is A plus BX under regression. X number of events for quarter four is 114. You will place 114. Now you need A and B. I use the formula of B. I used to use the formula of A. B, so much cells may be problematic. So it's no problem. You just write the formula, write the values, perform it on your scientific calculator, which you take in the exams, and just write the value of B. No need to solve all these on Excel. This is nothing to worry. You just need to write the formula, this formula, which I've highlighted. You need to write this, and then you can manually put the values in calculator rather than performing on Excel. So now let's find A. Summation Y upon N, right? Minus B. So B is in B11. So that is 295.93 into summation X. That is 1757 over N, 16. So what I can do is I can again put these values manually on a calculator and find the values, or I can do it directly, that it's 404410 divided by 16 minus B11 into 1757 divided by 16. Okay, so this makes it 7221.15. 404410 divided by 16. So this is the value of A. Many people may get confused. It's coming in negative. That's none of your business. Whatever the value is coming, we have applied the correct figures, then that's the answer. And finally, now we can go for Y equals to A plus BX. So Y is equals to A. A is minus. Let's increase the cell size first. So Y is equals to A minus 7221.15 plus B. B is 295.9296.114. Okay, let's find what is the answer. Two six five one 4.8. The question asked you to round to the nearest full day. So 26514.8 may mean that Y is equals to, what is Y? Number of staff days. So round off 26515 days. Okay. So this was your requirement. Worth how many marks? 5 marks. The question applied basic regression skills with you. Nothing more than basic regression skills. However, you need to be soundly prepared that you catch the things that number of events is X, number of staff days is Y. Ask for staff days Y. Quarter 4. Y is A plus BX. X is 114. I have A and B. I have to find A and B. I found B through regression, A through regression, and that's it. Okay, please copy this. Okay, now requirement A2, in my opinion, is a very easy requirement. Assume that your answer to A1 gave you a figure of 30,000 staff days. Although the staff days are 26515, But why they are saying like this? Because they know that some people might not have gotten the part A correctly. So at least their part 2 isn't effective. Assume that your answer to part A1 gave you figure of 30,000 staff days. Based on this figure, calculate Venhof's forecast revenue, staff costs, and gross profit. Revenue less staff cost for Q4 2006. Okay. Very easy requirement. Okay. Now for this requirement, I have to assume that answer to A1 gave you figure of 30,000 staff days. How many staff days are there? 30,000. Calculate revenue of Venhof's, staff cost, and gross profit. Okay. So revenue, revenue, staff cost, and gross profit. Okay. This is required revenue, staff cost, and gross profit. Okay. Now, what will be the revenue? Assuming that there are 30,000 staff days. Okay. What is the revenue of Venhofs? It's clearly mentioned in this question that Venhofs charges 16 per hour. Okay. And staff work for how many hours? 8 hours. You charge 16 per hour and staff work for 8 hours. Okay. That's for one day. How many days? It has told you to assume 30,000 days. Okay. So 16 per hour into 8 hours a day. This is for one day. Your revenue is for one day. 16 per hour you charge. 8 hours a day they work. Okay. They work 8 hours per day, per even day. So how many days they are working? Assume there are 30,000 days. This is your revenue. Okay. Staff cost. It's clearly mentioned that you pay your staff 11.25 per hour. It's not increased yet. Yeah. The HR has just proposed to increase, but CEO has disagreed. So 11.25 per hour you pay to your staff. Okay. They work for 8 hours. This is your one day cost. How many days? 30,000. Okay. So 11.25 per hour to 8 hours to 30,000. This is your staff cost. You deduct to get gross profit, but there is one more cost. You have to make contribution to the government at a rate of 10% to the amounts you pay to staff. So contribution to government. How much you pay to the government? 10% of the amount paid to staff, that is 2,700,000. So what is your profit? It's B15 minus B16 minus B17. That's it. Now you won't believe, but this requirement is giving you 4 marks. This requirement is giving you 4 marks. Okay. And people are really like this that when they come out of the exam hall, they sometimes say that the question passed over our head. That was such a difficult question. In part A1, I can understand that there was a lot of thinking stuff that what is X, what is Y. I need to find Y. That is staff days using regression. So it's A plus BX. X is number of events 114. I have to work for B, work for A. Okay. But see these 4 marks. Assume that your answer to part A1 gave you staff days of 30,000. Calculate revenue, staff cost, and gross profit for Q4. So revenue, staff cost, and gross profit. Okay. What is revenue? You're charging 16 per hour. Worker is working for 8 hours a day. One day revenue. How many days? 30,000 revenue. Staff cost, you're paying staff 11.25 per hour. How many hours? 8 hours. That's one day cost. 30,000 days. Total cost, contribution to the government. That's it. Okay. I will do one more thing, then you can copy. Calculate the correlation coefficient R between number of events in D-Land and staff days. Okay, so I have to find correlation coefficient R. In the examination, you will be provided the formula of R as well, but you know the formula of R. It's N summation XY minus summation X summation Y. Okay, under root N summation X square minus summation X whole square and then N summation Y square minus summation Y whole square closed, and for root it's power 0.5. Okay, so I will apply the formula. Let me do some calculations. I have got N16. I have got summation XY this. Okay, I have got summation X summation Y by multiplying these two. I have got N summation X square, summation X whole square, 175 square, and N summation Y square, this, and summation Y whole square, this square. Okay, let me do some calculations. I will just place the values here, or I can put it on the calculator as well and manually put the enter values, and or I can perform the workings here as well. N is 16, summation XY is 4549688, minus summation X summation Y is 17574044. The root N summation X square is 196615, summation X whole square is 1757 square, and then summation Y square is 107243851113, summation Y whole square. So the answer of R is coming as 0.8, positive correlation. Okay, so either you can manually calculate on the calculator after writing the formula, it's just worth 2 marks, or you can perform all the calculations on the Excel. Okay, so our 11 marks are done for regression. Please copy this so that I can move forward. Okay, now let's move towards the part B of this question. Part B is saying, briefly discuss the limitations of regression analysis. Okay, so I have taught you some limitations of regression analysis in that pricing chapter and the budgeting chapter. The limitations of regression analysis, if you have forgotten, don't worry, you can understand it here. Limitations of regression analysis. Now, regression analysis has some drawbacks. Number one. So limitation number one, regression analysis relies on past data to make forecasts. That is, what happened in the past will continue in future. This may not always be the case. Okay. Now, under any method of regression, what do? You find summation x, summation y from past data. That means you are believing whatever happened in the past, that is going to continue in the future. That's not always the case. This is the limitation or drawback of regression. It only considers two variables in making forecasts, whereas there may be other variables affecting the forecast. Okay. Now, whenever you have solved regression analysis, either here or in class, it always considers two variables, x and y. One variable x, one variable y. Okay. In making forecasts, it never considers more than two variables. Although there can be other factors like government influence, like taxation policies, like political concessions, social factors, technological factors. None of these factors are considered by regression in making forecasts. This is also a drawback. Regression analysis assumes linear relation between variables, whereas in real world relation may be non-linear. Okay, regression analysis assumes that there is always a linear relation between two variables. What is the meaning of linear relation? That when one variable value will change, other will also change. Okay, this is called linear relation, that when one variable value is changing, other also changes. This is called linear relation. So regression always assumes linear relation between variables, whereas in real world, sometimes relations may not be linear as well. Okay, so these are the three drawbacks of regression. You can copy these. Okay, so last requirement to end this question, and it's a general requirement. Discuss three factors both should consider when deciding whether to increase wage rate from 11.25 to 11.75 as the HR director has suggested. So from this scenario, you have to consider three factors that the board will consider when deciding whether to increase the wage rate. Okay. Now, let me just tell you one thing. You see, at the moment, the wage rate was 11.25 per hour. Okay. You're getting a profit of 870,000, right? If the wage rate is changed to 11.75 per hour, okay, your profit has started falling. Okay. Your profit has started falling. Okay. Previously, your profit was 870,000. Now, if you increase the wage rate to what do you say, 11.75 per hour, then your profit is going to get suffered. So it's asking three factors they will consider before deciding whether to increase the wage rate. Okay. I can make this table and I can say that the first factor they will consider is financial. If wage rate is increased, then company will suffer fall in profits from 870,000 to 738,000. This is approximately a 15% fall. Let me just confirm. Yes, it's approximately a 15% fall. We have no idea about expenses, but such a fall in gross profit may result in a big impact on net profit, right? If wage rate is increased, company will suffer a fall in profit. So this is the first factor. It's asking three factors company should consider when deciding whether to increase the wage rate. The first factor they will consider is that profits will fall from 870,000 to 738,000. Because if we increase the wage rate, the wages cost will increase, the contribution will increase, and the profit will fall. We don't know anything about the expenses, but if they are higher, then such a fall may result in fall in net profit as well. So that's the first factor they should consider. Second factor, ethical factor. It's present in the question. It's not coming from my mind. See, CEO opposes the increase, saying it will reduce profits, but HR has argued that it needs to take account ethical issues. Since it is mentioned that this work is physically demanding, not increasing pay rates may portray an unethical image of the company. This is also a factor that needs to be considered. That suddenly people start thinking that we are an unethical company. Any other factor? Let's find. Everything is in the scenario. Always remember in F5, everything is in the scenario, the theoretical discussion. These are not from the book. In recent years, there has been a shortage of workers. So One more factor before deciding whether to increase the wage rate. There is already a shortage of workers. If pay rate is not increased and workers get further shifted away from this work, company may not have workers and the business may collapse. You know that you are providing workers. There has been shortage of workers because people think that the work is physically demanding and poorly paid. So due to poor pay, people are shifting from this sector, going to some other work. So there is already a shortage of workers. So if more workers shift away, that no, these jobs are poorly paid, and workers have no interest in this catering sector, how will your business suffer? Your business may collapse. So you need to consider these three factors in deciding whether to increase the wage rate. Okay. Please copy our question of MAR-JUN 2024 past paper question for this regression analysis is over. And once you copy, you can then move towards the new question. Okay. Okay, now let's just continue with the next question of this March-June 2024 attempt. We previously covered the question of that regression analysis was a good question. Okay, gave you good practice. Now let's move towards the next question from this March-June 2024 past paper. This question relates to transfer pricing. Very easy and very good question from the looks of it. Okay. Caroline Company is a decentralized company which manufactures and sells radios. It has two divisions, radio division, which manufactures radios, and the packaging division, which produces boxes in which radios are packaged. Now, very important thing, Caroline is a decentralized company. It manufactures and sells radios. It has two divisions. Okay, the first division is called the radio division, which manufactures radios. And packaging division, it produces boxes in which radios are packed. Packaging division has no external market for its boxes. So what is the packaging division doing? Packaging division is producing boxes. Packaging division is producing boxes. And it has no external market. No external market means it can only give to the radio division. Because radio division is doing what? Radio division is making radios. Okay, radio division is making radios. Packing division is making boxes for the radios. And packaging division is no external market. No external market means it cannot sell externally. It only has to give to the radio division. Expected cost and volume of sales of the two divisions are, so packaging division, which makes boxes, radio division, which makes radios. Market price per unit is 220, variable cost per unit for radio division 120, fixed cost 500,000, annual units 20,000. Packaging division, there is no market price per unit. Why? It is not selling it is not selling to anyone externally. There is no external market for its boxes, so it's not selling to anyone externally. Therefore, no market price per unit for the packaging division. Variable cost per unit is 1. Fixed cost is 80,000. Okay. And annual sales units are 20,000. Pay attention, market price and variable costs are in per unit. Fixed costs are not in per unit total. And annual units are there. Current transfer price for the boxes is based on the full cost of a box plus a markup of 20%. Okay. Current transfer price for boxes. Who is making boxes? Packaging division. Who is making boxes? Packaging division. So current transfer price for boxes made by packaging division. Packaging division is no external market. It is only selling to the radio division, right? Packaging division is only selling to the radio division. So what is the transfer price? Full cost of a box plus markup of 20%. Okay. So let's note here that what is the current transfer price? It's the full cost of the radio. So what is the full cost of the radio? Full cost of the radio is 1 variable cost per unit and 4 per unit fixed cost. Okay, the current transfer price for boxes. Boxes is made by packaging division. Transfer price is full cost plus markup of 20%. So what is the full cost? Full cost is variable 1 and fixed cost is 80,000 divided by 20,000 units. So full cost is 4, fixed 1 variable. So this is the full cost of the radio. 1 plus 4. That is 5. And you apply a markup of 20% on that. So that means the current transfer price of the radio is 6. Current transfer price of the radio is 6. Okay. Because it's clearly mentioned in the question that the current transfer price of the radio is based on the full cost of a box plus markup of 20%. So full cost of the box is variable 1 and fixed 4. So the full cost of the box is 5 plus 20% markup. It's 6. This is the transfer price. Packaging division is making boxes. Packaging division is making boxes. It is not selling them externally, no external market, only transferring. So the transfer price is 6. Recently, an external packing company has offered to supply the radio division with boxes of the same specification as those produced by the packaging division at a cost of 4 per box. Okay. Now, at what transfer price you are giving boxes to the radio division? 6. Full cost plus markup of 20%. So at what transfer price you are giving boxes to the radio division? 6. Recently, an external company has offered to supply the radio division, this division, boxes of same specification at 4. You are transferring them the boxes at 6. Another company has given them an option to transfer at 4. Manager of the radio division has proposed 2 alternative responses to this offer. So manager of the radio division, he has got an offer to get it for 4. He has proposed 2 responses to this offer. Number 1, the first response, packaging division should be asked to reduce the transfer price to boxes to 4 per box, in which case radio division would continue to buy from the packaging division. Now, radio division also knows that the current transfer price is 6. He has got an offer to get it for 4. So what is the radio division manager saying? He is saying that the first option is that the packaging division, this division, reduces the transfer price from 6 to 4. So we will continue buying from them. Second, if the packaging division is not prepared to match the external supplier's price, it should be closed. All boxes should be purchased external. So second option, if they don't agree to this offer, we won't buy from them. If you don't buy from them, they don't have any external market, shut them down, and we will then buy boxes from the external supplier for 4. The packaging division's fixed costs relate mainly to long-term lease payments, and only 20,000 per year of its fixed cost could be avoided if it were closed. So packaging division fixed cost is 80,000. It relates to long-term lease. Only 20,000 per year could be avoided if you close it. If you close the packaging division, only 20,000 per year of the fixed cost will be avoided. Okay. So that's the scenario. So I have understood the case clearly that Caroline has 2 divisions, packaging division, radio division. Radio division means makes radios and sells them to external market. Packaging division makes boxes, sells them only to internal. Radio division, not to external market. Transfer price is full cost, 1 plus 4, 5, 20% markup. An external supplier has offered radio division that we will supply boxes for 4. He has said that either packaging division reduces the price or we won't buy from them, shut it down. Okay. Requirement A, prepare a profit statement. So you're asked to prepare a profit statement for each of the two divisions and for Caroline as a whole under the current transfer pricing arrangement. This has been a requirement which has been tested multiple times in PM exam, that you need to make a profit statement for each of two divisions and Caroline as a whole under current transfer pricing arrangements. Okay. Your sales and cost figures should be split into external sales and inter-transfers where appropriate, and split the figures into external and internal. Don't make it total sales. Split the figure into external and internal sales. Okay. So this has been tested multiple times, even in the practice questions and even in the previous year's past papers. We have solved this thing multiple times, that profit statement for each of the two divisions and Caroline as a whole under current transfer pricing arrangements. Okay. And the current transfer pricing arrangement is $6. Let's start. So profit statement for each of two divisions. Okay. How many divisions are there? Two. One division is called packaging division, and the other division is called radio division. Okay. So profit statement for packaging division and radio division, profit statement for each of two divisions, and for Caroline as a whole. So for Caroline as a whole as well, it will just be the total of both. So let's start. Let's make profit statement. Okay. So first make it for packaging division. Let's make it for packaging division. Okay. For packaging division, there is no external sale. Okay. It's for radio division. For packaging, there's no external sale. There is only internal sale. I'm making for packaging, right? Internal sale. What is the internal sale? They are transferring 20,000 units at a price of what? 6. So this is their internal sale. Okay. What is their variable cost? Only focus on packaging. Variable cost is 1 per unit, right? So 1 per unit into 20,000 units. Okay. And what is their fixed cost? 80,000. So what is the profit of packaging division? 20,000. So easy. For radio division, okay. Radio division is not making any internal sale. Radio division manufactures radios. It's not making any internal sale. Packaging division is making boxes. It can sell to radio as well as external market, but there is no external market, so they're only making internal sale to radio division. Radio division is making radios. It's only selling to external market. So external sale, 20,000 units, and radio division is selling at 220. This is their revenue. Okay. They're not making any internal sale. Variable cost. Their variable cost is 120 per unit, 20,000 units. Okay. What is their fixed cost? 500,000. Okay. There is one more cost of radio division. Purchase of box. Remember, they purchased the box from packaging division. Okay. At a cost of what? They are transferring for 6. So they will purchase for 6. How many units? 20,000 units. Okay. 120,000. So what is the profit? Radio division. Okay. And for Caroline as a whole, make total external sales 0 and 4,400,000. Internal sale 120,000. Just add them, 120,000 and 0, 120,000. Variable cost 20,000 for one and 2,400,000 for other. Fixed cost 80,000 and 500,000. I'm just adding, nothing else. Internal purchase cost 120,000. So profit Okay, that's it. 6 huge marks. Can you imagine? 6 huge marks. Trust me, very easy requirement. Now, from the standards of PM exam, trust me, I'm finding this requirement a very easy 6 mark requirement that calculate the profit of each division in Caroline. Caroline is a normal thing. Each division, packaging, radio, packaging division, not any external sale, internal sale, 6 per unit at 20,000 units, variable cost, 1 per unit, 20,000 units, fixed cost, you get profit. Radio division, external sale, 220 per unit into 20,000 units, no internal sale, variable cost, 120 per unit into 20,000 units, fixed cost 500,000, and they purchase boxes. They sold for 120, they purchase for 120, profit, and then add them all to get for Caroline. Okay, this is 6 marks. Please copy. Then we will move towards the next requirement. Okay, now if after this easy part, I move towards the next easy part again, because by the looks of it, again, the question seems very easy. Calculate the effect on profits of each division in Caroline as a whole if transfer price of 4 per box is used. Remember, there was a case that some external supplier offered to supply the boxes at 4, and manager of the radio division said, okay, make it 4 or shut down it. So it's asking that if transfer price of 4 is used, what will be the effect on profit? So current transfer price is 6. Let's find the effect on profit if transfer price of 6 is used, and effect on profits of each division and non-Caroline. Okay. So let's just first copy paste it. So now I am working if transfer price is reduced to 4. So if transfer prices are reduced for, what will be the effect on profits of each division in Caroline? So first, packaging division. Now the internal sale won't be 20,000 units into 6. It would be 20,000 into 4 because now transfer price is 4. Variable cost would remain the same. 1 per unit into 20,000 units, 20,000. Fixed cost would remain same, 80,000. Okay. So profit would now be 80,000 minus 20,000 minus 80,000. 20,000 loss. Okay. Radio division. Okay. Radio division's revenue would be 220 per unit into 20,000 units external sale. They're not making any internal sale. Variable cost 120 per unit into 20,000 units, 2400,000. Fixed cost 500,000. Now their purchase cost won't be 6 per unit. It would be 4 per unit into 20,000 units, 80,000. Okay. So their profit would be 1,420,000. And for Caroline as a whole, add both division, packaging and radio, 4,400,000, internal sale, 80 and 0, 80,000. Variable cost, 20,000 and 2,400,000. So 2,420,000 total. Fixed cost, 80,000 and 500,000, 580,000 total. And the purchase of box cost is now also 80,000. Okay, so the profit is negative 20 loss and 20,000. Okay, 1,400,000. No need to comment because it has told the calculate, not discuss. Okay, but still I will write that if transfer price is reduced dollar for packing division, profit of $20,000 will convert into loss of $20,000. Remember, first they were earning profit 20,000. Now they're earning loss 20,000. Okay. Means their profit has fallen by 40,000 approximately. From 20,000 profit, they've gone to 20,000 loss. So profit has fallen by 40,000, right? 20,000 profit less 0 profit, then 20,000 loss. So their profit has fallen by 40,000 approximately. Radio division profit has increased by $40,000 from 1,380, right, to 1,420. And overall company profit remains same, because that's quite normal. That's quite normal that, you know what, the thing is that transfer price is reduced from 6 to 4. So the selling division, packing division has incurred a loss of 2 per unit in its revenue, 20,000 units, 40,000. But the buying division is in benefit that they were previously purchasing at 6. Now they're purchasing at 4. So their cost falls by 2 per unit into 20,000 units, 40,000, their profit rises. So one selling division profit falls by 40. Other one buying division rises by 40. So net effect on the company remains same. Okay. Please copy this. We are completed with 10 marks. Okay. Okay, now 4 marks, last requirement, calculate the effect on profits of Caroline as a whole if packing division is closed and all boxes are purchased externally. So now you need to calculate the effect on profits of Caroline as a whole if packing division is shut down and all boxes are purchased externally. Okay, so now effect on profit. If Caroline division decides to shut down the packaging division, all boxes are purchased externally. Okay. So now if packing division is shut down and all boxes are purchased externally. Okay. So let's just decide now that if packaging division is shut down, all boxes are purchased externally, what would be the effect on profits? Okay. Now, if packaging division is shut down, they're not making any external sale. Okay. They won't make any internal sale. Zero. No variable cost, but they will still incur fixed cost. Only 20,000 of fixed cost would be avoided if it closed. So if it's closed, not all fixed costs will be avoided, only 20,000 will be avoided. That means 60,000 will still come. 80,000 won't be finished if it's closed. Only 20,000 can be avoided. That means 60,000 will still come. So this will still give a loss of 60,000. Okay. Talk about the radio division. Radio division is making external sale. 20,000 units to 20 per unit. Internal sale 0. Variable cost 120 per unit, 20,000 units. Fixed cost 500,000. Their purchase cost. If the packing division shuts down, they will still purchase boxes, but now from outside supplier. Okay, all boxes are purchased externally. So they will purchase 20,000 boxes now from external supplier at 4 per unit, 80,000. So their profit would be 1420,000, right? And make it total 0 and 4,400, 4,400, 0 and 0, 0. And variable cost 0 and 2,400,000. So fixed cost 60,000 and 500,000. And this 0 and 80,000, 80,000. So the profit would be 1,360,000. Okay. So if packing division is shut down, it will still give loss of 60,000. You can write this statement. Radio division profit would be same, but overall Caroline's profit would move to 1,360,000. That means if it asks later for Caroline, the best thing is that both divisions continue because Caroline is in 1,400,000. Okay. Even if packing division reduces the price, if it's still 1,400,000, but if division is shut down, then it's coming in loss. So if it asks you for your advice, it has not asked, no need to write anything. If it asks for your advice, you can write this. Okay, please copy. Our 14 easy marks have been captured. Now we will move towards the next 6 marks to see what is that exactly. Okay, discuss the advantages and disadvantages to Caroline of using a transfer price of 4. There is 6 marks, advantage and disadvantages of Caroline of using transfer price of 4. Now, currently the transfer price is 6. What are the advantages and disadvantages of using a transfer price of 4? If we use a transfer price of $4, the radio division will buy from packing division rather than going outside, which is good for the company's profitability or image. Okay. Using a transfer price of $4 ensures that packing division won't be shut down. Okay. One thing, this is not a bookish requirement that you can learn from the book and write. You need to think, okay, from the scenario that what are the advantages and disadvantages of using transfer price of 4. So using transfer price of 4 will mean radio division will now not buy from outside. It will buy from our own division. It's good for company's profitability. Using transfer price of 4 ensures packing division won't be shut down, because if you don't use the transfer price of 4, radio division is going to buy from external market and your division would be shut down. Using transfer price of $4 ensures fair performance measurement, as we are using market price. Okay, this results in fair performance measurement, because if you're using 6, that's against market. Using 4 means the market price being offered by the competitor is also 4. You are also offering 4. It's fairness. Okay. You can write advantages and disadvantages. The manager of packing division will feel demotivated and may not work for organizations' better interest in future, as his division has now become a loss-making division. Okay. Previously, using a transfer price of 6, remember on the previous screen, his division was making profit. Using 4, his division is making loss. So he may feel demotivated. That's a drawback, disadvantage. Okay. Radio division manager may feel motivated that company didn't force him to buy from internal division at 6, ensuring autonomy, because open transfer pricing ensures divisional autonomy. So these are some advantages. You can copy them. We have completed the MAR-JUN 20 past paper. Hope everything is clear. Thank you.